Welcome to Buy, Hold, Sell. I'm Jeremy Hook from TMS Capital. With me on the panel today is James Miller from Firetrail and Jelena Stevanovic from Platypus. What we're looking at today, in an environment where earnings post-reporting and for the last few years have basically been going down in the industrial side of the market, are those companies that are bucking the trend with earnings going up. We want to examine those and find out what our panellists think. Starting with James, Aristocrat, Buy, Hold, Sell.
It's a hold, and I realise this is one of the most loved stocks in the Australian fund manager community, but for us we're seeing a digital business which has got a lot of cost needing to go in terms of user acquisition, and also their land-based business. 5 years of great growth, but you're seeing some staff leaving to competitors. Might get a little harder from here.
Okay, Jelena, can the earnings growth catch up with that price now?
Look, I think it's a buy. It's a buy for me at this level. The multiple is not stretched still. The land-based business has a strong track record of growing share and earnings. The digital business does need to be repositioned, so the earnings growth there might be patchy, but the opportunity is still large.
Okay. Now, one that's been a phenomenon, everybody knows it, it's one of the biggest now, CSL hit $250. Buy, hold, sell.
Hold at these levels only on valuation, but it is a great business. Outstanding health franchise, the lowest cost producer in the market, the only one that's been investing into growing its capacity so that can actually service the growing market. A great franchise, but hold at this multiple.
The market loves earnings growth, but sometimes can pay too much, James. CSL, buy, hold, sell.
CSL's a buy, and the reason is it takes 5 years to build out a whole blood plasma collection centre. CSL's building 3 times as many as anyone else. And the market's already tight. So despite the valuation multiple, we see a pretty good runway of growth.
Okay. Fisher and Paykel Healthcare have probably surprised a lot of people. What do you think now? Buy, hold, sell?
It's a hold for us. The reason being on that stock is that it's more skewed towards sleep apnea masks rather than the generators. And we think in the US over the next few years, there could be some pricing pressure on masks, which is around 85% of their revenue in that division.
Jelena, do you share concerns about FPH? Buy, hold, sell?
Hold for me as well. Another great health franchise. The company has a truly differentiated proposition in the hospital segment. I do agree with the risks in OSA part of the business. The hold is purely in valuation again, has traded through its long-term PE range. So great franchise, but a hold.
What about a special of yours where there's either very good earnings growth in a lacklustre market for earnings or a real surprise the market doesn't know about?
Look, I like Goodman Group. It's an industrial real estate company, invests in locations that the company identifies as core, so being highly urbanised, exposed to strong e-commerce trends, and in high barriers to entry markets, so where land availability is poor. All those trends will support earnings profile of that company for a long time. It has a highly incentivised workforce through a share-based remuneration scheme that aligns interests of shareholders with the entire workforce. And unlike most companies in that space, it's a capital light model because most of the development activity happens not on their own balance sheet, but within the partnership structure. The only risk in the short term to call out is that the chunk of the portfolio sits in the Hong Kong geography, and given recent political risks, that may be a little bit of a problem.
Goodman Group, thanks for that, Jelena. What about you, James? What's the team and yourself found over there as a really good earnings growth story?
Downer is a business that's very well positioned. It's a company that develops and then operates urban infrastructure. It's trading on a multiple below the market multiple and has earnings growth above the market earnings growth. Not only that, if there is any fiscal stimulus directed towards infrastructure, then they're going to be a key beneficiary of that. So cheap valuation, earnings upside, it's a buy for us.
Excellent. Share prices will always in the long term follow earnings growth. Keep your eye out for Goodman Group and Downer.